During a summer quarter when most other large tech businesses saw their fortunes decline, Apple was able to increase both its sales and profit, but it doesn't necessarily imply the iPhone maker will be immune to a prospective recession. Even while Apple performed pretty well, the July-September results made it clear that the most valuable firm in the world is dealing with some of the same economic challenges that have severely hurt Microsoft's and the financial results of Google and Facebook. Apple's fiscal fourth quarter revenue increased to $90.1 billion, up 8% over the same period in 2017. That was an improvement above the meager 2% increase in revenue during the company's April to June quarter, when supply issues brought on by pandemic-related manufacturing closures hurt sales. The revenue and earnings per share were both little higher than expected by analysts. However, sales of Apple's most well-known product, the iPhone, as well as another significant revenue generator, and the services sector, were both lower than analysts had predicted, an indication that consumers may be making adjustments in the midst of the biggest inflation in 40 years. In a conference call with analysts on Thursday, Apple CEO Tim Cook recognized that the economy is becoming increasingly tough. Many people are struggling in many places. Investors first reacted badly to Maestry's prediction, pulling down Apple's shares by roughly 3% in extended trade, but by the time management wrapped up the conference call, they appeared to be feeling more bullish about the company's future. Late on Thursday, Apple's stock was up more than 1%. Similar to other formerly high-flying tech stocks, Apple's shares has fallen by roughly 20% thus far in 2022. However, as customers begin to feel the pinch of the previous year's stubbornly high inflation rates, industry analysts are beginning to worry about how much longer consumers will splurge on new phones. If such financial strains continue, more households might decide to limit their holiday spending, especially on the kind of expensive electronics that serve as Apple's mainstay. That's one of the primary reasons the research firm International Data Corporation is now expecting worldwide smartphone shipments this year to fall 6.5% from 2021. A downward revision of 3 full percentage points, translating into about 150 million fewer devices being sold from an earlier forecast made in May. According to Investing.com analyst Jesse Cohen, we knew Apple's iPhone business was slowing down, but we're also starting to see it leak into their services area, which will be one cause for concern. Maestry informed analysts that the services division's last quarter was most negatively impacted by declining sales of gaming and advertising.